Why are watch prices rising again? There's a few things to focus on. Primarily, the market's ticking up because crypto's pushing hard, S&P 500's pushing hard, tariffs all of a sudden, which increases cost of production. What's up, guys? My name is Chris Warrens, owner of Warrior Time. My team and I have been full-time watch dealers since 2017, and here on this channel, we're focused on education. So let's get into the show. Let's start with number one, market price ticking up. Generally speaking, the secondary market has been ticking up for most of 2025, and there's a lot of reasons. Many we discuss today on the show, and the major things that are really driving the market to increase slowly. It's not increasing fast. Major manufacturers like Rolex, Breitling, even Hublot, Omega have increased MSRP prices on the primary market once, sometimes twice this year already. So there's a lot of demand and people are buying, and they have been all year, which is great, but also allows prices to increase given said demand. So number two, crypto. Just by no means, I'm not a crypto expert. I own no crypto. I don't dabble in crypto. However, I do understand the parallel with crypto. What is the parallel? There's a parallel with the crypto market and the watch market. When crypto rises, so does the watch market. As of today, when I checked writing this show, Bitcoin was 115 grand per Bitcoin. Back in 2021, when Bitcoin rose, so did the watch market. Back in 2022, when crypto dipped, so did the watch market. And the same thing is to be said with number three, for the most part, the S&P 500 stocks. Again, I am not an expert in the stock market. I mean, I understand it generally, but I don't own stock. I don't trade stock. I'm not a day trader. I just understand the parallels. There's a parallel with the S&P 500 and there's a parallel with our watch industry. The S&P 500 had some dips this year around the spring. It kind of dipped off a little bit, right around the first quarter of an election, which is typical. But the S&P 500 has been pushing pretty hard and is rising and increasing. That parallel with our industry is going to tick our industry up. And fourth, your curveball, your variable that has gotten a lot of attention on the global stage over the past 4 months, tariffs. Generally speaking, I'm going to be very layman's here, okay? I do have an MBA. I have been to business school. I do understand economics. However, I'm not a professional when it comes to global economics, okay? There are people that are professionals. But in a very layman's terms, there's an incredible amount of debt in the trillions when it comes to the United States, and our admin or our CEO or our administration, however you want to say it, is responsible for it. The current administration is looking to mitigate the multi-trillion dollars in debt that our country has. Specifically, that was run up a lot over the past administration. Thanks, Joe. Their idea, our current administration, their idea is to create revenue to pay down that debt, for lack of better terms. How this revenue is created is taxing imported goods, tax for the American taxpayer. Because of increased domestic jobs, there would be increased domestic workers, which increases tax revenue. Primarily, though, if you tax imported goods, specifically the Swiss goods here, you're going to create revenue to be able to pay down debt. This supports domestic production, increased jobs, increased labor, increased tax of the middle class or the working class, which yields revenue, for lack of better terms, to pay down the deficit. Thus, the cost of manufacturing more to produce and import, in this case of Swiss goods, in turn will be absorbed by the consumer, given the increased MSRP because of cost of production and importing in their case. 39% tariffs on Swiss goods was agreed upon, or not agreed upon, but fell upon. You will not see a 39% increase in primary or secondary markets, I don't think. You won't see it directly. However, you will see an increase, and likely soon. My best guess is Q4 of this year, if not Q1 of next year. So let's close it out. If you want to learn how to work with us, links are in the show notes below. We buy, sell, trade, consign, appraise, service, whatever you want. And before you go, I'd love to hear your feedback on the show. If you haven't hit the like button and subscribe, please do. It helps the channel grow. And if you like this video, stay tuned for the next one on timepieces, because I bet you like that one too. I appreciate y'all, and I'll catch you next time. Peace.